Alright guys, just Jason Greystone here. Just thought I'd shoot out a quick video, a couple of things that are on the radar. One's the New Zealand dollar and one is the pound yen. So I'm going to talk you through what I'm looking at and why on these pairs, and there's a potential opportunity in either in a long position on the New Zealand dollar, and there's a potential bearish position on the short position on the pound yen. So I'm going to tell you what I'm looking about. So I'm going to explain what I'm looking at here now and walk you through step by step. So as you can see on the daily on the New Zealand dollar, we held this level of support down here at 68.60s, and since then we've been moving up, pushing up, and we've got a previous structure resistance level at 7,200 flat. Okay, now we know these levels of structure are like magnets. This is a decent level of structure, decent price level on this pair. It's one number to pay attention to. We've respected this level several times in the past, and if I was to predict where market was likely to go next, it would be up at this level here. So as we drop down to the lower time frame, I'm going to drop down to the 60. Okay, and what we've been seeing is after we broke out of holding this level down here, we put in new highs, right? Higher highs, and we've got a pullback here which we could potentially jump on as a trend continuation trade. And the problem is with this is stop loss placement. Okay, although this is a decent level to pay attention to, we've got this 70.50 level down here, right, which we know has become resistance. We broke through it and then it becomes support. There's no real decent level for stops. Okay, there's no decent structure level to get stops below. Now, there might be on a lower time frame, but on the 60, I'd certainly need a bit more confirmation at this level or somewhere to get some decent protective stops. Now, what I'm going to show you is this is what we call a Fibonacci inversion trade. So if we was to bring on our fib inversion, you're going to see if we use our fib inversion tool, we've got a 1618 inversion down here at 70.58. So you Fibonacci inversion traders, if you're an aggressive conventional Fibonacci inversion trader, you're looking at that 1618 and you're looking to enter that there. You'd have your limit orders set at that level. And if you are trading it as a Fibonacci inversion trade, well then your targets would be at a 618, or maybe you take a retest of the highs, but the stop loss is always a half of your target. Okay, half of your profit target. So you wouldn't really be worried about, whoops, let's just color that green. You wouldn't really be worried about structure for stops. You'd bring on your fib retracement just to measure out that, or use your ruler tool to get that 50%, half of your profit target, and you'd use that as your stop loss if that's the way you've tested this strategy. Okay. Now, if you're not a Fibonacci inversion trader, you're using this 1618. If you're not a Fibonacci inversion trader, you might be building out some extra confluence in this zone. So if we bring on our fib retracement tool from the previous low to the swing high, you can see we've got a 50% retracement right in that level as well. So we can start to narrow down this little kill zone here. Let's just bring on our retracement tool and clear off some of these. Okay, so you can see we've got a 50% retracement in there as well. What we can also do is bring on our fib extension tool from the previous high to this outside return. And you see we've got a 1618 in that zone as well. So there's some fib confluence. There's a nice little fib cluster in this area here. Okay, see that? So we've got a nice little fib cluster in this area here. Whoops, let me just. Right, so we've got a nice little fib cluster in here within 8 pips. There's a few fib levels to pay attention to in this zone. Now, conventionally, you'd be looking for a pullback down into the 1618 for the fib inversion. You'd have your limit orders set, and you'd be looking to ride this up to either a 618 retracement or a retest of the highs. Or if you set 2 targets, you might split your positions to take off some profits at the 618 and then take the rest of your position off up at the a retest of the highs. Or you might be looking for extended targets and trail your stops up to a retest of this high, this 7200 even handle number. Now, if you don't trade Fibonacci inversion trades, we've still built out this cluster down here, this area of confluence, which would be a decent level based on structure, psychological number, fib cluster, right, for an entry into a long trade. Now, if you're a bit more conservative, you might wait for price action to push into this zone and then look for a double bottom entry. You might look for RSI to go oversold here, look for some bullish divergence on the RSI, equal test of the low, i.e. a valid double bottom, and then all of a sudden you can get your stop loss and ATR below the lows and then look to enter that way. Okay, so that's another reason for entry. Now, if we drop down to the 15-minute time frame, you're going to see that we've got some structure here for protective stops. So if we bring on our fib retracement tool, you're going to see we've got an 886 completing in that area as well. And what the 886 means is a potential bat pattern completion. So all we need to do is check if we hit the 50% for the B leg, which we do. And all of a sudden we've got an aggressive entry reason into this trade. And yet another fib level down in that kill zone. So if you trade bat patterns, this is your chance for entry into an aggressive entry, into a bat pattern trade. And this is a scenario by being able to read price action and how market's moving. This would give you that discretion to be able to adjust your targets for an extended move using the bat pattern as an entry. So that's what I'm looking at on the New Zealand dollar. Hopefully you got some nuggets from that. That's what I'm looking at. Okay, and what I'm looking at on the pound yen, I know some of you guys are looking at this level for a potential long opportunity, but what I'm looking at is this as a head and shoulders formation. There's a couple of things I'm looking at here. We put in this head and shoulders formation. We violated the neckline here. So from a longer term trading perspective, I'd be looking for a pullback up into this previous shoulder level and looking for my entry rules to be met into a short trade here. However, if we drop down to the 60, because this is a bit of a way off yet, if we drop down to the 60-minute time frame here, you're going to see we've recently put in a lower low followed by a lower low. Okay, now what that means is it's similar to what we're looking at on the New Zealand dollar, except in the other direction. Now, if you're familiar with Fibonacci inversion-based trades, you might be looking for that Fibonacci inversion-based entry, and I'll explain what we're looking at. So if this is the lower low, lower close, and this is the previous lower low, lower close, I'm looking at an initial kill zone of this. The initial low to the previous outside return. This would be my kill zone. Now there's a high ATR on this pair, so you want to be mindful of the ATR and where your maximum stop loss rules. If you have a maximum stop loss, I can only take a maximum stop loss of 100 pips. I can only risk a maximum of 100 pips on the table in any one trade. So I'm looking at the ATR and I'm saying, right, my stop loss needs to be 30 pips above this previous outside return. So if my stop loss is going at 81, okay, I can only enter at 81, right? 140.81, I can enter at 139.81. That's the maximum that I can put on the table for this trade. So I can already see that I'm going to have to adjust my my initial kill zone, which means my window for entry won't be as broad. It won't be as broad because I need under 100 pips of stop loss or maximum 100 pips. So I know that I need to raise up my kill zone to meet that. Now, the second thing I want to check is, am I going to get a minimum of a 1-to-1 risk reward? So if I bring on my fib retracement tool, you can see this violates the 50%, which means I need to be above that 50% to get a minimum 1-to-1 risk reward. So I know now that if I'm shooting for a retest of the lows, I'm not going to get a 1-to-1 risk reward until above 139.90. So that means I've got to adjust my kill zone a bit more and trim that back a bit. So if I look at bringing my kill zone back now to 139.90, this is now my kill zone. So all I wait for now is price action to push into this kill zone, look for RSI to go overbought, and then enter on a lower low, lower close candle. Okay, now if you're to bring on some confluence in this zone, if we was to bring on a few fibs here, you can see we've got a 618 right up at previous structure resistance. Let's bring that on. Okay, you can also see that if we was to bring on an equal measured move here, you're going to see we've got an equal measured move right up at that zone as well at 140.50. 140.50 is a psychological number as well. Any number with 50 in it, we see these levels get respected as we did previously. Okay, now we can also bring on our fib extension tool. You're going to see we've got a 1414 in that zone. And this is also what's known as a fib inversion trade, just like I showed you on the New Zealand dollar just now. If we bring on our fib extension and use it as an inversion, you're going to see we've got a 1618 up at that level as well. So there's a couple of reasons for entry here. The broad kill zone is this big pink zone here. And if you wanted to narrow that down and really refine your entry with precision, you could bring on those fibs and get some confluence in that tighter zone up at this level here, where they got the ABCD. You got a little fib cluster in this zone as well. You know, not too much confluence with this fib inversion. If you're using the fib inversion, then that would be your entry technique anyway. Okay, but that's what I'm looking at on this, guys. Lots of potential opportunities on this pair. And again, lastly, if you trade advanced patterns, we haven't quite hit the 618 for the C leg yet, but an aggressive entry, if we can push down, you might find that market pushes down and gives us a valid C leg and then pulls back up, which would give you an aggressive entry for a pattern. That hasn't happened yet. It's not looking likely at the moment, but again, it's another thing on your radar that might meet your trade plan rules. Remember, we just want to be continuously looking at ways to enter high probability trading opportunities that meet our trade plan rules. So if that means dropping down to a lower time frame and there's an entry reason on a lower time frame, you can enter that. If you get stopped out, you can look at a higher time frame and look at the next entry reason. Remember, you want to always keep entering these trades that are in your trade plan, because they are the trades with a positive expectancy. You do not want to miss them. You want to get involved with as many as as you can. Many of them as you can. So that's it for today, guys. I'm in a couple of trades. I'm in an Aussie CAD trade and I'm in a Euro Yen short as well. Hopefully they play out and we can hit some targets, but if not, I'll update you with them anyway. And until next time, good luck in the markets, and I'll see you then.